Welcome back to Investing Talk Podcast.
Good to be back.
Today we're taking a look at HIMS and HERS Health, the telehealth company that's really trying to shake things up in healthcare access.
Right. It's interesting how they're using tech, to go straight to consumers for health needs.
Exactly. Founded, 2017?
Yeah.
Based out in San Francisco. And their whole approach is this direct-to-consumer model.
Mm-hmm.
So think getting prescriptions, over-the-counter meds, personal care stuff, all online.
And they cover quite a bit, don't they? Sexual health, hair loss.
Dermatology, mental health, even weight management now.
Mm-hmm.
So you're not going through the usual hoops. They connect you directly with licensed healthcare professionals on their platform.
And, looking bigger picture, that really speaks to this desire for convenience, easier access.
For sure.
Plus, offering it online maybe helps with issues people feel a bit sensitive about, reducing that stigma.
That's a good point.
Yeah.
So we've gathered some info background, recent news, financials, a bit of due diligence to really understand HIMS and HERS.
Kind of get a feel for what they're about.
Yeah, what makes them tick, what they've been up to, and where they fit in this, evolving healthcare space.
Okay.
So let's start with that foundation. San Francisco-based, like we said, and it all pivots on that direct online link, patient to professional.
Well, it stands out to me there is the potential reach. People who might not seek care otherwise. Maybe time issues, or they live far away, or just don't like the traditional setup.
It just changes the whole entry point, really.
Right.
Okay, let's shift gears a bit. Recent news. Looks like they have their Q1 2025 results coming up May 5th.
After market close, then a conference call. Standard procedure.
What do these calls usually tell us, beyond just the numbers?
Well, you get the performance snapshot, obviously. Growth, profit, how things are trending. But you also get management's commentary, their outlook, maybe hints about future plans. It's key for investors checking if they're hitting their marks.
Right, checking the pulse. And just before that, like April 29th, they announced a partnership, Novo Nordisk.
Yeah, saw that. Focused on weight management.
Sounds pretty significant. Expanding access to personalized weight care. What's the angle there, potentially?
Well, these partnerships, they let companies pull their strengths, right? HIMS and HERS gets access to potentially more weight care options, maybe leveraging Novo Nordisk's treatments or expertise.
Draw in more customers that way.
Could do. Broadens their appeal in that category.
And they're also showing up at that JP Morgan conference in Boston mid-May.
So, staying visible, definitely active.
Okay, let's talk money. Performance. Full year 2024 revenue was $1.5 billion.
Which is a big number, and up 69% from the year before.
69%. That's steep growth. What does that signal to you?
Signals rapid expansion, likely a mix of getting more customers and maybe getting more revenue from each customer as they add more services. Strong momentum, basically.
And then looking just at Q4 2024, their EPS, earnings per share, was $4.11, beat estimates by 2 cents.
Beating estimates is generally a good sign. Suggests they're performing better than the market expected, can definitely boost confidence.
Yeah, investors like those surprises. And we see historically the revenue trend is, pretty consistently up. Shows that focus on subscribers and adding services.
You dig into the annual reports for the real details there, but the direction seems clear.
And the EPS, earnings per share, it's been a bit up and down, but the general trend looks like improvement.
Getting more consistently profitable over time is, fundamental for long-term value. So an improving trend is what you want to see.
Now, some specific numbers weren't in the info we looked at. Things like PE ratio, debt to equity, free cash flow, ROE.
Right, the standard toolkit for deeper financial health checks.
So if you're listening and want those, you need to look at, say, recent SEC filings or use a financial data service.
Those ratios give you important context valuation, leverage, cash generation, profitability on investment. Without them, the picture's just less complete.
Okay, let's talk competition. It's not like they're alone in telehealth. Teladoc Health, Amwell. These are big players.
Oh yeah, it's a busy space, and everyone's got a slightly different angle. So understanding how HIMS and HERS fits in is pretty important.
Interesting. They're growing not just in the U.S., but also the U.K.
Mm-hmm.
And that focus, again, on direct-to-consumer and tackling that stigma issue seems like their core strategy.
And that focus could be an advantage. By going after convenience and discretion, especially for sensitive stuff, they can build loyalty, differentiates them from broader platforms or traditional routes.
Compared to, say, Teladoc, which has a huge global reach, more complex virtual care maybe.
Right. And Amwell, strong in the U.S., often plugged into existing health networks, working with employers and insurers.
So Hims and Hers is really betting on that individual consumer market.
Seems like it. Different go-to-market, which means different growth paths, different ways they get customers compared to the others.
And for Hims and Hers specifically, a key thing to watch financially would be revenue growth coming from adding new products and services.
Absolutely. Expanding what they offer lets them get more from existing customers, plus attract new ones looking for a one-stop shop, sort of. Crucial if they want to keep up that high growth.
Okay, let's balance this out. Strengths and maybe some potential red flags. We've hit on the strengths. Direct model, convenience, tackling stigma, powerful in today's world, right?
Definitely. People want easy, they want control. And opening up markets where stigma was a barrier, that's a real opportunity.
On the flip side, potential challenges. The regulatory side of telehealth. It's still kind of fluid, isn't it?
Very much so. Rules can change state by state, nationally. That's a constant thing to navigate.
And just sheer competition.
Yeah.
Established healthcare, other telehealth startups.
It's intense. Staying ahead, innovating while dealing with regulations, that's the tightrope they have to walk for long-term success. Profitability depends on it, too.
Looking forward then, what might push them forward? New product launches, more into mental health or general wellness.
Could be. New services, expanding into adjacent areas. That makes them a stickier platform, potentially more comprehensive in the consumer's eyes.
But those risks remain regulations, competition, always there.
Always.
Though, the big picture trend, more personalized, more accessible care, that seems to play right into their hands.
It does. The market wind seems to be at their back in that sense. Consumers want this, tech enables it.
And this whole shift towards consumer-centric healthcare, blending tech and clinical know-how,
Yeah.
that's expected to keep going.
Yeah, the companies that figure out how to blend that seamless digital experience with actual high-quality care, they're likely the ones best positioned going forward.
Let's touch briefly on leadership. Andrew Dudum, co-founder and CEO. How important is the management team in this picture?
Oh, critical, especially in a fast-moving industry like this. Their vision, their experience, how well they execute the strategy, it's fundamental.
And if you want more on his track record, performance, proxy statements are usually the place to look.
That's where you'd find details on executive history, compensation, governance stuff.
Right. We didn't see specific insider trading info in our sources, but again, SEC filings or financial sites would have that. Same for things like price to book or beta.
Standard metrics you'd find on most financial platforms.
And worth noting, they seem focused on growth right now. Doesn't look like they're paying dividends.
Common for companies in this high growth phase, reinvesting back into the business.
And just to circle back on risks, main ones are those regulatory changes and just the heat of competition.
Yep. Understanding the leadership and being clear-eyed about those risks is just crucial for anyone looking at the company.
So, summing it up, Hims and Hers, telehealth player, strong growth, distinct direct-to-consumer angle, but operating in a dynamic, competitive field with regulations to watch.
And that upcoming earnings report, the Novo Nordisk partnership, key things to keep an eye on right now.
Their ability to navigate all that, keep innovating, stay competitive, that's really going to determine how they do long-term.
Pretty much sums it up.
So here's a final thought to leave you with. As healthcare keeps moving online, becoming more digital, how do companies like Hims and Hers thread that needle? Balancing the demand for easy access and, sheer convenience with all the complexities, the regulations, the established medical practices.
That's a really core tension, isn't it? How that balance plays out will probably define a lot about healthcare's future.
Indeed. If you found this analysis useful today, please do subscribe, give us a like, and leave a comment. We appreciate the feedback.